Alright, so Charli D'amelio is now partnered with Dunkin Donuts. Why does this matter? Well, Charli D'amelio is the most followed TikToker with 86.6 million followers, and additionally has massive reach and exposure through her other social channels such as 28.6 million followers on Instagram and 7.1 million subscribers on YouTube. So needless to say, this is a really big deal for Dunkin Donuts and potentially a big deal for you. Here's why. It does not seem that the traction and growth that this type of partnership can provide has actually been priced into the current stock price. So this just might be your chance to beat Wall Street and rake in the big bucks by buying low and selling high. But let's not get ahead of ourselves. Before making a move, let's dive deeper into the details and get the full picture surrounding this Dunkin Donuts stock trade. What's going on, guys? JP here with another Biz Rich video. This one's going to be a little condensed because I wanted to make sure and get it out in time for you to make any trades that you see fit. And if you're new to the channel, I'm always posting about business and money, so make sure to hit that subscribe button and notification bell so you don't miss a video. So I got interested in buying Dunkin after seeing it all over TikTok. I actually mentioned this stock in a previous video last week where I went over how I built the 7 income streams of millionaires within 24 hours. But since then, I've been hearing about Dunkin in many trading communities. And by the way, it's ticker symbol DNKN, and I believe it's listed as Dunkin Brands. I also want to point out that I know people have put millions into this trade already and are going to continue investing into this as the stock growth accelerates. I am not a financial expert by any means, but I have done a good deal of financial analysis in the past, but that was more from a value standpoint and less in like public markets. Another thing I want to point out is that I have talked about the power of shareability and virality of content and its effects in many of my videos, and this will be the key to the success of this stock. And before I actually go into the fundamentals and financials behind Dunkin Donuts, I actually wanted to start with this portion, which is basically just speculation of influence and social traction. And as I mentioned earlier, Charli D'amelio is actually the most followed TikToker and has over 100 million followers across all of her social channels. Another thing I want to point out is the viral nature of TikTok. There are a few things that contribute to this. One, the share function, how easy it is and how prominent that is to prompt people to share. We've actually seen the power of this alone with stocks like Dogecoin, or I think it was Dogecoin, I don't know. We saw that stock move over 100% over the 3-day period. And that wasn't even initiated by a celebrity. And this kind of ties into the next point, which is the trend nature of TikTok. And this carries over to the Charli drink at Dunkin Donuts. Charli D'amelio is obviously making content about her new drink. She made one video, which the hashtag she used on that video, which a lot of people jumped on and started using. Just that hashtag alone has over 147 million views. This comes from Charli and other people using that hashtag. But many very big TikTokers are making videos about the Charli drink as well and are not using that hashtag, meaning that the drink is getting additional exposure that is not even being accounted for in that 147 million views. Here's one of the videos I'm talking about.
Yes, can I get the Charli? This drink actually real, that's crazy. Okay, I got the drink. Let's see what this about. It's good, Charli. Make me want to renegade.
I thought that one was hilarious. Anyways, that video got over 10 million views. Point being here with all of this is that the drink has definitely gotten a significant amount of exposure. Enough for it to be selling out at various locations. Definitely a good sign. Alright, and adding to this kind of like qualitative analysis portion, I want to point out that this is Dunkin's move to target Gen Z. So this is a very valuable demographic for them because they could be highly influential to this market who is, consuming and following these people. And this is their opportunity to actually change the habits of these consumers. To me, I see this as a potential long-term play and something that will continually add value and revenues to Dunkin Donuts. And I think eventually this will be considered by investors. All right, let's get on to a little bit of the financials of Dunkin. Expected earnings is the first thing I'm going to talk about. They have outperformed expected earnings for the last 4 quarters. So Q3, Q4 of last year, Q1, Q2 of this year. Now I want to talk about their PE ratio, their price to earnings ratio, which is around 28.8 To give you some perspective, McDonald's is 34.5, Burger King, which is actually Restaurant Brands Incorporated, around 25.4. Starbucks currently has a PE ratio of 77, at least as of today, and that's clearly because of some kind of earnings issue. Typically they're around the high 20s and low 30s. Also, I believe McDonald's is probably inflated. I didn't look too much into McDonald's, but they did release the Travis Scott meal around the same time. That has kind of also had a viral effect within social channels. So I think McDonald's, their stock has definitely been inflated. To kind of get an overall picture, the average retail restaurant price to earnings ratio is 34. Now let's look at the PEG ratio, the price to earnings to growth ratio, which is 3.01, and that is high. You know, we can look at the comparables again, which is McDonald's 4.55, Starbucks 4.57. And I think this really just hints towards the market as a whole being overbought. One thing I want to make sure to mention here is that Dunkin Donuts is actually closing 800 locations. Obviously they presented that as a good thing, you know, to help the performance of the company overall. Over half of the locations are within these like Speedway convenience gas station type stores, which only account for 0.5% of 2019 sales. And as a whole, the 800 locations that they're closing down accounts for 8% of US locations, but only 2% of 2019's total sales. And they explained in an earnings call that this is actually to allow reinvestment into the brand, whether it's remodeling existing locations or to pick better locations, more strategic locations, higher traffic. I don't know, we'll see how that goes. Another key thing to note is Dunkin Donuts is really focusing on digital. So this includes digital marketing efforts. I want to include influencer partnerships. Also, they are really pushing the adoption of this Dunkin Mobile App. In Q2 of this year, their perks program, which is within the app, had a 110% increase over the previous year. So not only does this allow the company to like incentivize sales through, you know, push notifications of coupons and deals and stuff of that sort, but it gives them access to valuable customer data. I think it's a pretty big deal what they're doing and the traction they're able to achieve with that. All right, so there are a lot of factors to consider here. You know, we have the price to earnings ratio, the price to earnings to growth ratio, the physical retail locations being shut down, these digital marketing efforts, and you know, these marketing strategies through partnerships. So I just want to give you guys the information to make your own decision. The stock market's kind of crazy lately, so I think the main thing is to watch the news, watch the traction, and also the acceleration of the conversation surrounding this. Also, if you click the link in my description, you can get a free stock with the Robinhood investing app, so definitely get your stock below. All right, thanks for tuning in. Make sure to hit that subscribe button so you don't miss the next video, and I will see you next time.